All-star panel to kick off our Monday coverage. Joining us here in studio, Laura Lau, Chief Investment Officer at Brompton Group, and David Doyle, Head of Economics at Macquarie, and Martin Pelletier, also with us, Senior Portfolio Manager for Trivest Wealth at Wellington-Altus Private Counsel. Great to have you all with us. And Laura, I'm going to start with you and the story right now of the political realities, which are changing every day. But in the markets, people have to make sense of it. What's been your take on how the market is reacting to all of this?
So I think, before the assassination attempt on Trump, the markets thought maybe 60% chance he'll be president. And now with the assassination attempt went to 70, and then it's probably down to 60 now with Kamala. But this is still a winner take all. So I still think that right now, it looks still like a Trump victory because those battleground states, it looks like he still has, quite the lead there. And if Trump does take the presidency, there is actually a good chance he will sweep. The Senate will probably go to Republicans because the Democrats won on the thinnest of margins, 50-50, and the House could likely go to the Republicans as well. And if that happens, a Republican sweep, that means a very pro-business environment, less regulation. The other thing that people forget is there are tax cuts that he put in place his last presidency for consumers. And if that's not extended, 2026, the tax rates go up. So, that being said, last week, the market was saying Trump's going to win. And everything rallied except tech. And that's kind of what happened last time as well, when those presidential results came in. So that's kind of the playbook going forward. So I think the sectors that will benefit the most would be financials, because that's where Biden really had a lot of heavy regulation. So that's why, the big banks, small banks did very well in the U.S. last week.
Banks moving. A lot of people think, big pharma maybe gets more of a pass in a Trump presidency. Martin Pelletier, how have you been as an investor monitoring the political dynamics?
Well, like everybody else, just in shock and bombarded with all kinds of really interesting and scary types of scenarios being presented to us. And so you can see that the market has been reacting and moving more towards a Trump victory. You saw the shift towards the Russell 2000, the small caps, and Trump's corresponding announcement that he would look at cutting corporate taxes by 15%, and so there's a lot of inflationary potential coming out of Trump, and so as a result, you're seeing some multiple expansions, but also the forward outlook for earnings growth in the Russell 2000 is really interesting. This year over year, it's 6%, but next year it's expected to go up to 17%. And that's a recent development, and that's something we're going to be keeping a very close eye on.
David Doyle, in terms of the economic ramifications here, I think the stock market's trying to figure out, which sectors are poised for growth, whether or not there's any disruption to, the earnings story that Martin was talking about. But on the economic front, what are you watching with respect to these political dynamics right now?
So from where I sit, the biggest issue is the threatened tariffs. Right, so Trump has said he would implement a 50 to 60% tariff on all goods coming out of China, a 10% tariff on goods coming from anywhere else in the world. When you do the math on that, that has the potential to be a significant economic shock, taking U.S. tariff rates back up to where they were in the 1930s, and at a time when the world is a lot more globalized. Now, it's unclear to me to what extent he'll actually carry out those tariff threats versus use them as a negotiating tool in order to have a better trade relationship for the United States. But that to me is the most uncertain point, and it does suggest that at least when you're looking at ramifications for the market, that type of a strategy would favor domestic U.S. industry over more globalized companies. And it's interesting that Martin brought up the Russell 2000. Of course, the Russell 2000 small caps tend to be more domestically focused in nature. So their outperformance on the heels of the assassination attempt does make some economic sense to me.
Okay, so Laura, if Ottawa has to keep an eye on what happens in Washington, and as David talked about, there are some policy pushes that could be complicated on the economic front. You know, as an investor, how are you thinking about investing in the Canadian stock market right now, let's say versus the American stock market? The TSX, let's remind our audience, has also been on a record run recently.
So one thing people have to forget is the USMCA, which is the U.S. Canada-Mexico Free Trade Agreement. July 1st, 2026 will be renewed. So Trump is going to make some changes to that because he's the one that brought it in. He's the one that brought that expiration date. So the biggest impact will probably be on autos. Basically the content rules. So that's probably not a good place to be because what they're afraid of is Chinese companies are setting up factories in Mexico. So they're afraid that they can try to circumvent some of those content rules. And certainly dairy in Canada, that's also on their list. So I think that the other thing that's actually ironic is the Republicans, you see Vance and Trump, they're actually very pro-oil, pro-coal, more deregulation. And ironically, oil and gas does better under the Democrats because they have less supply. So we'll see what happens there on the oil and gas side. So what we're seeing is that I do think that the U.S. is probably still going to be a good place to invest in Canada, since if the U.S. does well, we do well.
And Martin, before we take a quick break, I want to come back to you because I know that energy is an area you continue to watch very closely. Obviously, it is a big component of the Canadian economy, but also the Canadian stock market. What's your outlook for a sector like that?
I'm still bullish, and the only concern I would have in regards to what Laura had mentioned about U.S. and encouraging more drilling is I don't know how much they can influence the price. And there's a lot of still trepidation among U.S. producers still, and we're starting to see more of a focus on dividends and share buybacks. And what's going to cause that to change? And it's going to have to be oil prices. And right now, there seems to be a ceiling and a floor on oil prices. And so, which is the perfect scenario for Canadian producers, which we prefer over U.S. producers. Also, due to the benefit of a falling Canadian dollar versus a U.S. dollar, that's going to remain higher and benefit those producers. So, and also too, I do think we're going to see some inflationary pressures in the U.S. From the tariffs. The fiscal deficit, Trump ran a large fiscal deficit as well, and that's not going to change. And then, as I mentioned earlier, is corporate tax cuts. And so you want to have a little bit of that inflation protection in your portfolio and owning some U.S. dollars and doing so through Canadian energy.
All right, lots of good ideas.